Hi, welcome back to another episode of Talking Tax with Alex. This episode, we're going to do something a little different. We're not going to look at a court case. I'm going to look at recent tax law that just changed, and we'll look at some relevant provisions, I think, that affect a pretty broad category of taxpayers. So, the recent piece of legislation that just passed was the Inflation Reduction Act, and so this was passed in August of 2022, so a couple months ago, and details are still coming out, specifically related to the clean vehicle credit and how to measure that. We'll go to that in a minute, but I wanted to talk about just four provisions that are, I think, predominant in the news cycle and I think affect a lot of taxpayers, and it's probably just good things to know if you're a homeowner or if you're looking to buy a electric vehicle. These are good things to know. And I'm sure if you've been reading the news or paying attention to anything like that, the increase in IRS funding, what does that mean? I'm going to give you some of my point of view as a tax professional and hopefully shed a little bit of light. I've talked to clients and they've kind of asked me about that as well, so I figured it would be handy to share it and to get a little bit of perspective if you're not in the tax world. So here's our agenda. It's just going to be four things really quick. We're not going to go into a court case, and we'll wrap it up after this. So the first the first change in the new legislation is the new energy efficient home credit. So the thing that changed here was it used to be a $500 lifetime credit. Now it's $1,200 annually. So before, in years past, once you claimed the credit for $500, you couldn't claim it anymore. Like, that was it. That was done. So now you can actually get a $1,200 credit per year so long as you keep making energy efficient upgrades to your home. So what does that mean? So 30% of the cost that you spend to make your home more energy efficient can be applied to this credit. 30% of what costs. So the law kind of states some of the things, such as you can get a home energy audit. You can get $250 per exterior door, limit $500 so you can replace 2 doors. And these all add up to the $1,200 annual limit. So if you're going to do like a total renovation, you might want to stagger it over a couple of years because then you can get a little bit more credit. You get $600 total for exterior windows, $600 for other qualified energy property. What is that? That's central air conditioning, electric panels, certain related equipment like that, natural gas, propane, oil furnaces, water boilers, etc. So again, if you spend a certain amount, you get 30% up to $600 of tax credit to apply. And for each of these buckets, you can have a total sum of $1,200 per year. And then finally, $2,000 for a heat pump or heat pump water heaters. And this limit is separate and above the $1,200. So if you do have like a pool or something and you get a heat pump and it costs more than that, your limit is actually $2,000, not $1,200. The next credit that changed, and this credit it was in flux in 2021, 2022 is the first year it was starting to phase out. And so 2022, it was very interesting that this law came out in August. So it applies retroactive all the way back to January 2022. And this is the home solar credit. So maybe you've heard about it. A lot of people are installing solar panels on their homes. And what this credit does, or is you get a 30% credit of what you spent for those solar panels to apply to your taxes. And this credit was starting to phase out, what I just said a couple moments ago. It was starting to phase out in 2021. It was set at 30% in like 2018, 2019. 2021, it was going to go down to 26%. And then it was going to slowly creep down to 24% or 22%, and then it was going to expire in 2023. And so the Inflation Reduction Act effectively took this phase out that was happening. So 2022 is going to be a reduced credit, and it brought it back up to a 30% credit all the way to 2034. So now you can get a 30% of your spend for your solar panels as a credit, as a federal tax credit on your tax return. And they are adding rules for a new credit for battery storage of up to 3 kilowatts per hour. I'm not an electrical engineer, I don't know what that means, but there's going to be some new rules and new regulations for a new credit related to battery storage that didn't exist in the original credit that was offered in the previous years. The next credit that changed in the Inflation Reduction Act, and I think it's maybe making some waves. It's a refiguration of the electronic vehicle, or the electronic vehicle credit, electric vehicle credit, and I think we're relatively familiar if you know people that drive Teslas or various electric vehicles. Those credits kind of got eaten up. There was like a certain amount of vehicles that each manufacturer could sell for the credits, and so the Inflation Reduction Act changed some of the credits and the qualifications, and they did remove the manufacturer limitation as well. So the credit is still $7,500 for newly purchased electric vehicles. There's now a increased incentive, $40,000 for vehicles greater than 14,000 pounds. So this is like for semis and stuff. I think this space is brand new, and I don't think it's quite been explored yet. I don't think there's quite those things on the market, but this is trying to create an incentive for those. And one of the things that changed in this new law is that now the electric vehicles final assembly need to be made in North America. And the guidance hasn't really come out for this yet, and this is going to be something that we have to wait for the IRS, and I think a lot of the manufacturers are pressing the IRS for this guidance because we don't know what this means. And so trying to figure out how the credit applies, we don't know yet. We're waiting for guidance from the IRS, but we just know that final assembly needs to be in North America. And so there's also some limits now. So if your AGI is $300,000 or more as a married filing, MFJ is married filing jointly, or $150,000 as a single taxpayer, then you won't qualify for this credit. And then finally, they put a limit on the price of the vehicle. So a regular passenger vehicle at $55,000 or less will apply for this credit, but if it's more, then it's not going to apply for this credit. And so I know in the world of electric vehicles and just cars in general, 55,000, it's kind of a lot, but there are luxury vehicles on the market where this credit's not going to apply to. So obviously $80,000 for electric vehicles for trucks and SUVs is a different threshold, and I guess most taxpayers, buying a vehicle such, that's $55,000, $80,000, that's a luxury vehicle to most of us. So this credit is going to apply to most vehicles that we're purchasing, but I think Teslas can definitely run higher than that if you get certain levels of trim, and so I think it's just going to be something interesting that's going to affect the electric vehicle market. And then finally, there's a calculation for where the battery components are sourced, and just like the final assembly in North America bit, we don't have the guidance for what this means and how this calculation is going to happen, or how it works. So right now, we're just going to wait for the IRS to give us guidance on what this means. But these are the changes for purchasing new electric vehicles. Something new that also was implemented in this Inflation Reduction Act is now there's a credit for pre-owned clean vehicle credits, or pre-owned electric vehicles. It's called the pre-owned clean vehicle credit, and this is actually a new aspect. So before, you could only get the credit for purchasing new electric vehicles. Now you can get the credit for purchasing used vehicles, and that credit is worth 30% of the price, or the lesser of 30% of the price, or $4,000. The credit on this one is limited even further. So if you have AGI, adjusted gross income, of $150,000 married filing jointly, or $75,000 as a single taxpayer or tax filer status, then if you have more than that, you're not going to be able to take this credit. Finally, the last bit that I wanted to talk about related to the Inflation Reduction Act is the increased IRS funding. So about $79 billion of additional funding is going to the IRS over 10 years. So I think this is worth mentioning and talking about. I've had clients ask me, hey, Alex, what does this mean? Does this mean we're going to get more audits? What is this money going to be used for? So I think first things first, let's look at what IRS Commissioner Charles Reddick says. Basically, he's saying that these resources are not going to be increasing audit scrutiny on small businesses or middle income Americans. It's going to be going to their IT and allow them to better serve all taxpayers, including small businesses and middle income taxpayers. So what I take that to mean, and as a tax professional, I work with the IRS, and I can tell you, especially since the onset of COVID, the pandemic, it's been very frustrating. So calling the IRS, trying to get answers, the law changes, the stimulus payments that came out, and then the IRS is responsible for dealing with the repercussions of how that's filed on tax returns. All of this has really set the IRS back. They're already operating on an archaic system, and all of these changes that happened in the last 2.5 years to their system and to the tax law and to taxpayers and the resurrection of old law that was supposed to expire, NOL carrybacks and stuff, like this has created a whirlpool of stress on the IRS's system. So working with the IRS, in my opinion, it's this funding is really needed. They need people and resources to update and modernize what they're doing. They need to cut through their backlog of paper returns and everything. Like I truly believe that they're not going to use this additional funding to increase the audit for middle income taxpayers. They're so far behind that this funding, even if it's coming over the 10 years, I mean, they're not even going to probably catch up for the next year or two. And that's not to say there's going to be any other tax laws that change in the next year or two. We got an election coming up this year, and then we have another presidential election coming up in 2 years from now. So there's a lot of stuff that could change from over the next 10 years. And I really think that the IRS needs these resources. So as a tax professional, it is very frustrating. And then that frustration carries on to our clients and other taxpayers because we can't get answers. We can't, it's almost impossible to call the IRS and get answers, to get filing status of where returns are, to know when refunds that are due are supposed to be processed. I personally speaking, just from my experience, like trying to call through to the IRS is at this point unadvisable. Like it's a waste of time. You're not going to get through, and then that just means you kind of feel helpless. And I have a lot of clients who are sitting and waiting on refunds to get processed, and it's been a year or longer, and you just don't know where it is in their system, and you can't call to find out. And this is money that's owed to them, and it's not getting any better. There's a lot more issues coming through. There's an employee retention tax credit that's coming through. There's a bunch of fraud that is being perpetrated through all of this. There's a lot of repercussions that happen from the pandemic that are just now starting to, I guess, not even now. It's continuing to play out. Like the pandemic's ramifications into the tax system is just playing out now. And because you have to file your tax returns from the past year and stuff, it's a little bit behind. So now most of our day-to-day lives are not impacted by the pandemic anymore. There's remnants here and there, but the tax system, tax laws, filing stuff, statute of limitations is open for 3 years. There's just so much that's still going to happen. So I really think that they need this funding, and that's kind of my thoughts on this. And my closing thoughts for this episode is just consult your tax advisor for more information. I kind of give a quick overview of what's at play in this law, but if you want to know if it applies to you or more specifics on how to calculate the credit, or which home improvements qualify for the home improvement credit. Maybe some planning on how you're going to, stagger your renovations. Like I said, you may not want to do it all 1 year, because now you can get that credit over every year, $1,200 per year. Maybe you want to, do certain upgrades per year. Consult your tax advisor and talk to them and work it out with them. So that's it for this episode. It's a brief tax update, something different. I haven't done something like this before. If you like this kind of content, like the video, subscribe to my channel, comment, or email me your thoughts. Would love to interact with the viewers. And that's all I've got. Thank you for watching, and next time we'll go into a court case analysis. Bye-bye.